people are feeling good about where the markets are headed. Do you still think that volatility is the name of the game in the foreseeable future?
I do, for two reasons. One, sentiment is even good around the bond market, which has been destroyed.
Right.
The impact of 7% inflation, which is to say a 3% negative interest rate,
Yes.
means that, if I'm right, we've only seen the first leg down in the bond market.
Yeah.
But people are ignoring that. More importantly, however, is equity market breadth. The breadth in the equity market is all around the Magnificent Seven.
Right.
Wonderful companies, world-dominating companies, but you look at the strength in the S&P 500, it occurs in seven companies. It doesn't occur at 493 companies.
Right.
So the cost of capital for 493 companies is high.
Yes.
The cost of capital for the seven is sub-zero. So I'm very concerned about the narrowness of the market. I am impressed with the real strength of the U.S. economy.
If you are a crypto investor, then you know how cumbersome it can be to report your crypto transactions on taxes. There is a simpler way. CoinLedger is a crypto and NFT software which does your tax reports for you. Just sign up for a CoinLedger account and link your crypto wallets to it. That's all there is. CoinLedger will then automatically generate a tax report for you based on your transaction data. This tax report can be sent to any tax filing software, TurboTax, TurboAct, Wealthsimple, etc., or just passed on to your accountant. CoinLedger's tax report will be even generated in your local currency if you choose. The software supports DeFi and NFTs. CoinLedger is the highest rated cryptocurrency tax software platform in the world right now, which is why over 500,000 investors already use CoinLedger to help file their taxes. Use my promo code with the link in the description down below and start saving time on your tax filings with CoinLedger. Don't get caught off guard this tax season. It's my pleasure to welcome Rick Rule to the show, former CEO of Sprott US, currently the investor and speculator, legendary investor and speculator, might I add. You've been in the space for many, many, many decades. Everyone here knows you were at the Vancouver Research Investment Conference. You're also the founder of Battle Bank and the founder of Rule Investment Media. You wear so many hats. First question, how do you manage your time?
I failed retirement completely, David. I, as you know, retired as an officer director of Sprott Inc., although I'm still the largest shareholder.
Right.
Retirement didn't suit me at all, so I failed completely. I'm back doing what I love, which is working very hard in natural resources and conventional financial services. If it didn't pay so well, I'd do it for free.
I do want to talk about your views on macroeconomics, gold, uranium, commodities, so on and so forth, but why Rule Investment Media? I mean, you've had a storied career investing in the resource sector. What are you trying to achieve with your media business?
Everybody gives back in their own way.
Okay.
And I regard it as mostly philanthropic. Although I believe that the best philanthropies are sustainable, which is to say they make money. Rule Investment Media is all about education, investor education. I have now graded for free over 80,000 investor portfolios, ranking portfolios 1 to 10, commenting on individual issues where I think my comments might have value. And I've started an affiliate channel called the Rule Classroom, where there are over 200 hours of educational instruction about how to invest in mining and oil and gas.
Right.
So the Rule Classroom, as an example, will tell you how to interrogate a mining company.
Right.
In addition to that, we do day-long boot camps covering one topic. It might be uranium, it might be silver, it might be royalty and streams. Really, it's an education business, but the idea is an education business that will make a profit, that when I really truly do hang up my spurs, I can sell to my employees and will carry on.
Excellent. Let's talk about the Federal Reserve. You and I have talked about the Fed many, many times. I remember a quite eloquent quote you gave me once, which is that if the Federal Reserve were an entity like you and me, they would be in jail for money laundering. I'm paraphrasing.
Right.
Or counterfeit money, were your words. Yeah. They're pivoting now. I'm guessing you think they're counterfeiting more money?
We have not seen them need to counterfeit recently, because the market for treasuries has been strong enough that they haven't needed to steal money. There is much more liquidity in the U.S. system than many people give them credit for. The discussion around the Fed right now, I think, involves around will they cut interest rates or will they not cut interest rates? It would appear, and I'm no economist, please, it would appear that the U.S. economy is strong enough that they don't need to cut interest rates. I think the Fed recognizes that there's no fiscal discipline in Congress.
Right.
So the only entity in the United States that can fight inflation is the Fed. I think the Fed believes that the U.S. economy is strong enough that they don't need to cut interest rates. And unless or until there's another liquidity crisis, they don't need to do quantitative easing either. That could change on a dime. It could change on a dime. Remember that we could have a liquidity crisis in the United States that comes about from some factor that we hadn't thought about
Yes.
at any period of time.
Yes.
In which case, the Fed would print like mad.
The St. Louis Fed balance sheet, the Federal Reserve balance sheet, which I'm going to show you from the St. Louis Fed website, has been in continuous decline ever since 2022. Is it necessary for them to continue shrinking their balance sheet? What are they trying to achieve here?
I hope they shrink the balance sheet. I hope that they take their own holdings of securities and put them in the market. Because I hope, if we have a crisis again, that they have the necessary firepower to deal with that crisis. So the idea that they can subtract liquidity from the market
Yes.
By shrinking their own balance sheet, I think is a very good thing to do.
Yes.
Well, I wish the Fed didn't exist.
Why is that? Can you please elaborate?
I think that the market for money and the market for interest should be free. I think that the market should set interest rates. I think that the citizenry of the United States should insist on a balanced federal budget. I don't think that we should rely on fraud and subterfuge to manage our economy.
Sure.
Having said that, I think the Fed has been unusually effective, given the fact that I disapprove of the job they have to do.
Right. Well, the Federal Reserve has arguably been effective in lowering inflation. Would you agree or disagree with that statement?
I would agree.
Okay.
I do not feel that the rate of inflation is as low as is popularly believed, however. I think that most of your viewers, when they think of inflation in the context of the CPI. And I don't think that the CPI is an actual measure of the cost of living. I think it's a contrived index. In the first instance, the CPI is, quote, hedonistically adjusted, which means that the people who construct the index assign arbitrarily values to sectors as large as housing and technology.
Yes.
I think, too, that when it's inconvenient, it doesn't include food or fuel. Without being unnecessarily self-depreciating, as you can see, I like to eat. And an index that doesn't include food or fuel is, from my point of view, useless. But the worst part of the index, David, is that the CPI doesn't include tax. For American and Canadian families, the largest component in their cost of living is tax. An index which doesn't include tax, the fastest growing household expenditure on the continent, is not an accurate index. I tried to construct, admittedly, roughly, reconstruct over 5 years my own cost of living. And I came to the conclusion that the basket of goods and services that I consume, which sadly includes tax, means that my own savings are depreciating at 7% compounded.
Yes.
The CPI says 2.8. So let's assume for a second that you own a U.S. 10-year Treasury paying you 4 in a currency where the purchasing power is declining by 7. What that really means is instead of receiving 4, you're losing 3. That, I believe, is closer to the truth. And that, by the way, is one of the reasons why I'm bullish on gold.
Because you think inflation really is much higher.
Much higher.
But it doesn't gold, correct me if I'm wrong, Rick, but doesn't gold react more to the direction of the inflation rate, meaning if it goes from, let's say, 6 to 9%, 9 to 12%, and so forth, regardless of the actual absolute level?
I think if you look at the perception of inflation over the last 30 years, you're right.
Right.
I had the good fortune to live through the decade of the 70s.
Okay.
What happened in the decade of the 70s, the specter of inflation was in front of us at the beginning of the decade.
Yes.
But nobody cared. People lived through 20 benign years of economic climate. It wasn't really until the famous Fed pivot of 1976 that consumers looked at the deterioration of their purchasing power and went crazy. We have now lived through 40 benign years in North America. 1982 to 2022. Our perception of the future is set by our experience in the immediate past. It's going to take a while before American and Canadian consumers understand what's being done to them. And my suspicion is when they do, they will revert to time-tested measures to fight inflation.
I want to move on to the markets now. Before we talk about specific asset classes and your outlook, I want to talk about sentiment overall. The equity markets, the S&P 500 in particular, has reached new all-time highs last week. Consumer sentiment overall has gone up. Yep. The fear and greed index is tilting more towards greed than fear. It seems to me like, Rick, and correct me if I'm wrong, but people are feeling good about where the markets are headed. Do you still think that volatility is the name of the game in the foreseeable future?
I do, for two reasons. One, sentiment is even good around the bond market, which has been destroyed.
Right.
The impact of 7% inflation, which is to say a 3% negative interest rate,
yes,
means that, if I'm right, we've only seen the first leg down in the bond market.
Yeah.
But people are ignoring that. More importantly, however, is equity market breadth. The breadth in the equity market is all around the Magnificent Seven.
Right.
Wonderful companies, world-dominating companies, but you look at the strength in the S&P 500, it occurs in seven companies. It doesn't occur at 493 companies.
Right.
So the cost of capital for 493 companies is high.
Yes.
The cost of capital for the seven is sub-zero. So I'm very concerned about the narrowness of the market. I am impressed with the real strength of the U.S. economy. We have more than doubled the U.S. interest rate, doubled the cost of capital, and in my community, there's a genuine labor shortage. They're paying young people $20 an hour to start at Safeway. This is an amazingly strong economy. I'm not as concerned about the economy as I am markets, which I think are currently delusional.
Delusional from a valuations perspective?
Yep. From a confidence perspective.
Right. And long-term bond yields, I'm not talking about the short end of the curve, which is affected by the Fed funds rate, but the long-term bond yields, where are they headed, up or down, Rick?
In the near term, up because of confidence.
Okay.
In the long term, down. As
Okay.
Franz Pick said, they're certificates of guaranteed confiscation.
Yes.
If you're getting paid 4% in a piece of paper that pays you in a currency that's depreciating at 7% compounded,
Yes.
ouch.
And we're entering a period where rates are coming down for the first time since many, many years. How does this affect companies' cost of capital and thus your asset allocation?
Again, we're seeing bifurcation.
Okay.
Investment grade companies that can sell paper into the 10-year market or the 15-year market have increasingly lower cost of capital. Mortals, however, companies that aren't investment grade, mining companies,
Yes.
that have to finance in the project market, their cost of capital is very high.
Right.
The cost of capital for companies around here, if they're lucky enough to get to the feasibility stage,
Yes.
the cost of debt capital is reading 15%, 16%. The prime interest rate is irrelevant to them because they can't access it.
For sure.
We're seeing now with credit card interest rates. I saw a credit card interest rate the other day. Bank interest rate for a consumer, 29%. People are borrowing revolving money at 29%. So when people talk about declining interest rates, they're talking about declining interest rates among the Fortune 500, among investment grade companies. You aren't seeing declining interest rate in revolving consumer debt.
Well, let's talk about banking for a minute now. What do you think needs to be fixed or reformed in the retail banking sector?
I think the retail banking sector is over-levered. I don't think that 7% is actually a good number in terms of well-capitalized. I think that too many banks try to be too many things. Too many banks try to lend in 400 business sectors. The idea that they can afford to have underwriting capabilities in 400 sectors, even if they're as big as JP Morgan Chase, is silly. I think, too, that banks have come to believe in the too big to fail dictum. You look at banks like the Bank of America, where if you mark their portfolio to market in terms of their time spread, they're actually upside down. But the banks are allowed, the big banks are allowed to, from my point of view, perpetrate fraud. They're allowed to carry those loans on the books if they say the loan is held to maturity at the face value of the loan, rather than the net present value of that loan at today's interest rates. So banks are taking on time spread still, borrowing short and lending long. That's okay until it isn't.
Yeah.
If you're funding in the overnight market, and like 2008, the overnight market goes away, you're done. You're toast. I think that's a big problem.
Certainly, they've got risk management teams looking into this. Are they asleep at the wheel, Rick?
I believe that they're operating under a false set of assumptions. I believe that they're encouraged to operate under that false set of assumptions by our own government. But I believe, in addition to that, as we stated earlier in this discussion, the period 1982 to 2022 was the most benign economic period in human history.
Yes.
What the bankers have learned is that if you take risks, you get paid.
Right.
I don't think that's what a banker is supposed to do. I think a bank is like a self-administered bond portfolio. It's a wonderful place to be if you are good at blocking and tackling. Banking is a great, great, great business if you don't get anything wrong. But people have been encouraged to get things wrong. And that's really scares me. I mean, I knew some of the guys at Silicon Valley Bank.
Yeah.
They were really smart guys. They
Right.
were fantastic tech bankers.
For sure.
But they got themselves involved in a circumstance where their asset book had a long duration.
Was it the Federal Reserve's fault for raising rates too fast, too soon?
I don't think it was the Federal Reserve's fault. It isn't. I mean, the loan book of Silicon Valley Bank was not the Federal Reserve's fault.
Sure.
It was Silicon Valley Bank's fault.
Sure.
I cut my teeth in business in the decade of the 70s, where a 1% rate increase, driven by the market, not by the Fed, was a weekly event.
Sure.
All these young guns, and perhaps they were too young, at Silicon Valley Bank needed to do was familiarize themselves with history, and they wouldn't have made those mistakes. They teach you in university about time spreads. Time spreads were responsible for the demise of the U.S. savings and loan industry.
Yes.
These guys either don't remember their second year money and banking course. I can't explain that failure.
Can you tell us a bit about Battle Bank and your business model and what you're trying to do?
Yeah, I need to say that one of the things I did in retirement, which I don't recommend to anybody else who wants to be retired, is I'm starting a new bank. This bank is really a function of the fact that in 1998 we started another bank called EverBank. And that bank was one of the first of the internet-only banks in the United States.
Okay.
And it was a spectacular success.
Yes.
We grew from 0 to 28 billion in deposits in 14 years. We sold the bank to TIAA-CREF. Wonderful exit, wonderful job looking after our customers. TIAA, when they bought that bank, bought it to serve their 1.5 million existing members and beneficiaries.
Yeah.
Which means that the unique features that were exhibited by EverBank were no longer of use to EverBank. And the 275,000 customers that we developed over 14 years were left stranded. Being an entrepreneur, seeing a 275,000 person market that I helped assemble, I couldn't resist the temptation to come back and serve them. So our bank will be a branchless bank.
Okay.
An internet-only bank.
Right.
If you aren't technologically competent enough that this is our branch, you're not our customer.
Interesting.
Okay? We are a bank that won't profit from abusing our customers. We're not going to have 15 kinds of savings accounts, 5 of which pay you no interest. We're going to have one savings product that you could write checks against that will pay you interest.
Okay.
We will be in the top quartile in percentage paid in all of American banking. Our durable competitive advantage, very low customer acquisition cost.
Sure.
We have 275,000 customers who we think can come to us for existing relationships.
Sure.
We got those customers because they were subscribers to Agora. Agora now owns 30% of our bank.
Okay.
We have a waiting list to start this bank of almost 12,000 people who want to do business with us. When we started EverBank, our backlog was 0. Now it's 12,000. On the asset side of the balance sheet, amazingly, there's $33 billion, we believe, in gold and silver in the U.S. in segregated accounts, and there's no bank lender servicing that market. So providing what are in effect margin loans to holders of physical gold and silver means that we'll have a proprietary lending product too. And by the way, we know how to talk to the gold and silver community. It's what we've done for 50 years. So again, our customer acquisition cost relative to the customer acquisition cost evidenced by, say, Royal Bank of Canada or Bank of America, will be much lower.
Just so I understand, so if you're lending to customers who want to use their gold and silver deposits as collateral?
As collateral, correct.
Okay, and what are we talking about in terms of interest rate here for this product?
It's going to be prime linked.
Right.
So probably prime +2, prime +3.
Yeah, and the advantage is, I guess, people can actually earn money while holding gold and silver.
There are a lot of people, David, and mercifully many of them known to me, who own a lot of gold and silver.
Sure.
And they don't want to sell.
Sure.
But they have intermittent need for liquidity.
Right.
There might be the there might be the opportunity to buy a rental property. They need the down payment.
Sure.
There might be a summer cottage for sale. They might want to buy more gold or silver.
Sure.
The fact is that there's no other financial institution that I know of in North America which is offering revolving credit facilities secured by segregated accounts of gold and silver. The other thing that we will do, which we did at Everbank, which was stupidly successful, is introduce certificates of deposits in foreign currencies. We had a huge business at Everbank in first-generation immigrants to America. Families that had a business in Hong Kong and they have a business in America. Families that had a business in Canada and they had a business in America. Families that had a business in Germany and they had a business in America. They wanted federally insured deposits in their host currency, and they wanted to do currency transactions between their home currency and the US currency at reasonable rates.
Right.
Royal Bank of Canada charges 2%. JP Morgan Chase charges 2.25%. For existing customers, we'll charge 50 basis points. We built an $8 billion business at Everbank in foreign currency CDs among first-generation immigrants to the United States. Real Americans, people who came here out of choice. We're going to do that again.
Okay, let's finish off with the commodities, and an area in which you're an expert on and have been an expert on for many, many decades. Tell us about how commodities and the economy are interlinked. In other words, a more direct question, is there a commodity or a series of commodities that have had a good track record of predicting economic growth?
It is alleged that copper has that.
Okay.
Now, David, I need to say, I get asked economic questions and I answer them out of an eagerness to please. I am not an economist. I'm a credit analyst.
We understand. You're a very humble man as well.
So, it is alleged that Dr. Copper, as it's called, is a wonderful economic forecaster. In my career, I haven't seen a lot of evidence of that, but perhaps that's because I've misread Dr. Copper's missives. So I have to leave the answer there.
We're at a resource investment conference, and you told me offline that this sector is the most hated sector right now out there. Why is that?
The junior resource sector is really, truly hated. And I think it's hated because it's underperformed for so many years. Let's look at the gold mining business just for a second as a proxy.
Yeah.
In the period 2000 to 2010, the gold price went up 7-fold. Okay? Free cash flow per share among senior gold miners representing the Philadelphia Gold and Silver Stock Index fell. It takes real skill to generate lower free cash flow per share when the selling price of your commodity increases by that degree.
Why aren't they managing the cost well?
Pardon?
Why aren't they managing their cost well? What's the root problem here?
My suspicion is at that period of time that they were given leave by the investors to grow. The investment attribute that they were asked to exhibit was leverage to the gold price.
Right.
Which is to say the investors asked them to be marginal.
Sure.
It's the lowest cost producer that has the most leverage. Well, if you ask somebody to be marginal, that's pretty easy to achieve. And the industry became so marginal that their cash flow per share fell. We've talked about the juniors, you and I, before.
Yes.
If you look at the length and breadth of the junior industry, there's probably 3,000 companies worldwide.
Yeah.
I would suggest to you that 10 or 15% are viable. 85 or 90% are non-viable. So if you look at the performance of the sector, the entire sector, it will always be substandard because 85% of the population is substandard. You have to, as an investor, look through to the 10% of the companies that are viable. Those companies in a good market generate so much performance that they add legitimacy and sometimes luster to the 85% or 90% of the market that are comprised of the lame, the halt, and the blind.
Would you say then, just extrapolating on that, would you say on average only less than 10% of projects have positive ROI?
That's generous. That's generous. I think only 10% of the companies, maybe 15, have a chance to be successful. Many years ago, a young intern, that's financial services speak for slave, was working for me. And he pulled 25 then VSE companies, now TSXV companies at random. And he found, admittedly 25 is not a good statistical survey, nonetheless, he found that of the 25 companies he pulled, the median company spent 64% of capital raised on G&A. How is that sustainable? You're in a risky business where 35% of the money is invested in a risky business with the hope of generating a sustainable return.
Right.
65% of the money goes to lifestyle.
Yeah.
Now, I'm not telling your listeners not to invest in juniors. All of the money that I now invest conservatively, I got by speculating aggressively. But it's important to note that I did the work. And people who are going to survive in this sector cannot buy the sector. They need to buy individual names.
Yes.
And they need to do the work to do that. If they aren't prepared, I would suggest to work 1 hour per month on every name that they have. They're not prepared to be in the sector.
Drilling should be their highest cost, not SG&A, right?
It doesn't need to be drilling. It can be geophysics, it can be grassroots prospecting, but project expenditures need to be 75% of total capital raised.
Do you feel like you're walking in this room and this is like a VC exhibition where you're picking projects and you're just kind of hoping 1 out of 10 or 1 out of 20 of your picks makes it big and the other 19 fail, and that's okay. You're made it back. Is that your investment philosophy, Rick?
It isn't any longer because I'm very picky.
Right.
If there's 200 exhibitors here, I might have a second call with 12 of them.
Right.
In a market like this, where everybody hates the market, the probability is that of those 12, 8 will exhibit positive risk to reward.
Where are you guys out of?
So in a market that's out of favor, I will be unusually successful because my entry cost will be so low. It is very true that and you need to differentiate between the developers and the advanced explorers and the earlier explorers.
Sure.
The expectation in exploration, everybody needs to understand, is failure.
Sure.
You will make more bad decisions than good decisions.
Sure.
So my expectation every time I write a check is that I'm going to lose 25 or 30% of the money that I wrote the check for. Understanding that if I write enough checks, I'm going to get a 15-bagger with a full warrant, which means I'm going to get a 25-to-1 return. And that 25-to-1 return is going to amortize a lot of 25% fails.
If you have a call with a miner, what are the first 2 questions you would ask the person on the phone?
Before I even call,
Okay.
who are the people?
Okay.
Pareto's law works. Your audience will know Pareto's law is the 80-20 rule. 20% of the population generates 80% of the positive utility. A different 20%, by the way, generates 80% of the aggravation. So your job before you make a call is to make sure that the people that you're calling inhabit that good 20%. More importantly, what you learn with Pareto's law is that if you run that LIP, that 20% of performers, through the same performance dispersal curve, it conformably aligns, which means in English that 20% of the 20 do 80% of the 80, or 4% of the people in this hall generate 65% of the positive utility. And it turns out in my life over 50 years, the same test applies one more time. So 0.8% of the population generates 40% of the returns in junior mining. If you hang out with the serially successful guys and you ignore everybody else, you make money.
So you didn't even mention the jurisdiction or the grade or the deposit. The people behind the projects who have had a track record of success, they're likely to repeat that success.
Before I make a call, I got to know and love and trust the person. If somebody I know and love and trust calls me up and says, Ricky, you got to look at XYZ, because they looked, all look. But for me to originate a call, I got to know the person, and their success has to be closely related to the success at hand.
Right.
If their success was they operated a gold mine in French-speaking Quebec in 2 billion-year-old rock, But what they're doing today is exploring, not operating,
Yes.
for copper gold in 15 million year old terrain
Sure.
in Spanish-speaking Peru. I don't care about their success, or at least I don't care very much.
Well, fortunately for my audience, we'll close it off here. You actually provide this service
Happy
to our viewers. People can submit their portfolios to you to rank. You've done, what was it, 80,000 of these so far? Do you continue to do this?
I do.
Okay.
I do. This business has been very good to me.
All right.
I love the people in it. I love the people who run the better companies.
Right.
I love the people who invest in the companies. I love the geologists. I want to help people become better investors. I actually want to become part of the process where the companies who deserve to die do, and the companies that deserve to succeed do. Okay. And you do that through investor education, which is my mission now.
Right. Right.
So for people who care what I think, if they go to Rural Investment Media and they submit their portfolio, no obligation, no charge, I'll rank it. Please, no pot stocks. Please, no crypto. Please, no tech stocks. Just give me resource stocks.
Okay, fair enough. RuralInvestmentMedia.com. Thank you very much, Rick. Absolute pleasure to catch up with you as always.
Congratulations on your wonderful career trajectory. You're just knocking it out of the park.
Well, thank you. I'm trying to keep up with you. And thank you for watching. Don't forget to like this video and follow Rick